This is WCM's Park Update, a weekly show covering the outdoor hospitality industry, hosted by Ben Quiggle and Mike Gast. During each episode, you'll hear from special guests and campground experts on topics that will help your park flourish. WCM's Park Update is a production of Woodall's Campground Magazine.
Hi, I'm Ben Quiggle, editor of Woodall's Campground Magazine, and welcome to another edition of WCM's Park Update. Of course, my esteemed colleague, Mike Gast, former vice president of Campgrounds of America, is here, and he's enjoying life in Nebraska.
I'm sitting in the sun here. You can see my hitting my head there. I'm soaking up as much as I can when I can.
Yeah, that's pretty much what you got to do. So it's not like Hawaii where it's just all the time, I guess. So, and then our guest is Paul Bosley, founder. You're the founder, right? And
yes, I am.
CEO of the Business Finance Depot. You've been going around to, you go to a ton of different conferences. You're going to be at the National Association of RV Parks and Campgrounds National School of Management here pretty soon. I guess, when does that start?
We have a faculty meeting on this Sunday, and all the classes are next week.
Yeah, and Paul so you do quite a bit of SBA stuff. Do you do anything outside of the Small Business Administration, or is it mainly SBA loans and those types of loans, I guess?
Actually, we have two other products besides USDA SBA, that we've been doing quite a bit of.
Okay.
As you can imagine, most of the campgrounds are located in rural areas. So USDA, United States Department of Agriculture, has a commercial lending program that we use quite a bit. And there's some advantages and disadvantages to that, which we can dive into, I suppose, later. And then one of the things that's happened quite a bit is when you and I saw each other out at the Glamping USA show out in Colorado, I started walking around the outside quite a bit and talking to the manufacturers of all the glamping structures and the park model cabins and tiny homes. And they really don't have much financing in place. And because I've been in the fitness industry for the almost 48 years, we do a lot of equipment financing in that industry. A lot of those treadmills and elliptical machines are leased. They're not, they're financed in the. So we've been doing a lot of equipment financing, and we picked up about probably 4 or 5 of the major manufacturers that are sending us over all the people that already have real estate, and they're just trying to finance the actual cabin or the glamping structure without refinancing their mortgage. So we've been doing a lot of equipment financing and USDA loans in addition to the SBA loans.
Yeah.
Paul, maybe we could back up a little bit, Paul, and just talk a little bit about what the last couple of years has really done to the lending business in camping. Is it exploded? Did it contract for a while and then explode? What was the pace like?
Well, it's kind of interesting because I track our business, as you can imagine. Being a finance guy, it would be kind of silly for me not to track my own business.
Yeah.
And we have been almost exactly even on an annual basis for the number of applications that we received, which is, the main tracking source, because the number of applications, I think, are the things that really drive everything that we do. And now the question is, what percentage of those applications can be approved and then are in turn accepted? When you look at our actual sales volume at the end of the process, when we actually are paid at the closings, our income has almost been exactly the same too. So it's interesting because I would have never expected that. If you would have asked me going into COVID and interest rates going way up, if nothing's been stable at all. And our income and our number of applications have been stable.
So I guess, have you heard from more investors in things that are and people that are interested in owning or developing parks? Did that go up after COVID, or has that remained pretty steady for you guys too?
I think the number of people looking to get into the parks has dropped a little bit, but the number of people that have a park that want to finance glamping structures and improve their campgrounds has increased. I think that's where the change has been. And I think the part of our business that for financing fitness has almost gone away, and it's been replaced by people that are trying to finance campgrounds. I think it's been like a shift in our business, because you got to realize our business we're in 3 industries. We're in fitness, which is where I started, and I'm still in fitness. We're in franchising, where we do a lot of franchise financing, not campgrounds necessarily, but other franchisors that we do. We do a lot of fitness franchises, actually. And then the third industry is the campground industry. So we're diverse in that we are in 3 different industries and we have different products. And I think it's just they kind of even themselves out somehow. It's like an ebb and a flow or something.
So I would assume that a lot of your business before the pandemic would have been very knowledgeable, experienced campground owners that were expanding or buying more campgrounds. Has that changed? Do you have a little less knowledgeable type of person coming into the business now?
Absolutely. We're seeing a lot of people that own some acreage and they want to develop it into Airbnb or into campgrounds. I've seen that a lot more. It's not a little bit, a lot more. People that have some real estate and they're trying to figure out how to make money on the real estate.
Yeah. I guess, what's it like dealing with those kind of newer people? I guess, does it take a little bit more effort on your part to help them understand all of the pieces that go into like building or buying a park?
Yeah, I used to have dark hair before the pandemic. Now it's all white. Yeah. Yes, there's a lot more hand holding. We've developed software that helps them with the financial projections a lot, that's tailored specific to the campground industry. We hired a company that teaches Excel, and I showed them all the financial projections and the loan request forms that banks send out. They're just Excel templates that people have to fill in, and we've customized them so it's all in one file. So when you change like the number of campgrounds, the number of pull-through sites you have, or the number of glamping structures you have, or what you're going to charge for them, it automatically adjusts the loan request and the financial projection. So we've tried to make it so it's easier for people. Yep. And we usually give that as part of our service, is the way we work with most people. So it just makes their life a lot easier.
So what is the start to finish timeline on applying for a loan until the loan goes through?
Well, it depends on which loan you're talking about. Equipment financing is very fast. It's the paperwork's not as involved. We get a couple of invoices from, if they're whatever the manufacturers they're using. They get, maybe the underwriter might have a couple questions, and then they either get approved or declined. And once they get approved, they send the paperwork over. Once the person signs it, that's pretty much it. Then the lender takes over from there, and the loan is finalized after the equipment is delivered and installed, and then the owner of the property signs what's called the delivery and acceptance form, and they say everything's fine. And then the loan, the lease of the loan starts to get repaid. That process is quick. SBA is a little bit more involved. We get people pre-qualified. A lot of times we have people that are trying to get pre-qualified before they even go to find a campground. So they come to us and they try to figure out how much their financing they can get for financing. So that process is really kind of simple, because we just get their bio and their personal financial statement, which lists their liquid assets and their debt and everything like that, and we get their tax returns and their their bio. I said the bio. So then we get all those, and then we get them a letter of intent, kind of saying, all right, Michael, you're financeable for up to $1 million. So now you can go out, kind of like getting pre-qualified for a mortgage.
Mhm.
Now you can go out and start looking for the campgrounds. And we do that a lot. It's a service that some of our SBA lenders have come up with, because basically in their jargon, you're taking people off the street. You're getting them so they're committed to that lender because they've given them the bio. So they're not going to go out and shop the loan, with somebody else. They're going to use the company that gave them the pre-qualification. That's the advantage to the lender to do that. So once they get the information from the park owner that they want to purchase, they get a letter of intent, and they get the tax returns and the interim financial statement. Now it's just a matter of putting the documents together with the buyer's documents, and then they get a letter of intent back from the bank. If they're not buying a campground and they're just going to build one, then the only difference is now you got to get the contractor's bids, and you got to get the land purchase agreement, whatever's involved with developing the site. And then eventually, in both of those cases, they get a commitment letter from an underwriter. And now once they sign the commitment letter, they're under contract either to buy the campground or to build the campground. And the lender includes the interest expense within the loan that they expect. Buying a campground might take 90 days, where building a campground might take a year. So they estimate the interest expense within the loan. And then when everything's completed, the loan closes, and then they start. So for those two examples, I would say equipment financing is probably 90 days, maybe 120 days, depending on how long it takes to deliver the equipment. A lot of people are going toward glamping structures because they're quicker, I'm sure you've heard that the park model cabins, you're sitting around waiting for a year, right now. With SBA loans, if you're buying a place, probably 4 months, maybe roughly. If you're building, I got one guy I'm doing a USDA loan for, but on my 3rd year anniversary.
Wow. Is that
Go ahead, Ben.
Is that mainly due to the loan process, or is that just due to all the other like land and like zoning and different processes that they have to go through to develop the park?
It started out as an SBA loan under 5 million. And one of the things with USDA loans, they go up to 20 million, 25 million actually. So because of the pandemic and the price increases, his loan request ended up going over 5 million. So we had to switch lenders to go from SBA to USDA. And then there's just a whole different process there. USDA, to answer, your question, Michael, the prior question about the timing, USDA takes longer for 2 reasons. One, you have to do an environmental study first to make sure you're not, maybe getting involved with developing an Indian burial ground, or, maybe eagles, or, something like that. Actually, I got an interesting story about one of our US KOA clients that they found some Indian burial grounds on the land that we're going to develop. And you also have to do a feasibility study. So those things have to be completed before you can get into underwriting. And then once it's approved by the bank, it has to go to the regional USDA office for them to approve it also. So that process takes much longer. But the reason people go through the process is the loans go up to 25 million. That's number one. Number two, with SBA, once you hit 5 million, you're done. You can't get any more SBA loans. So if you get somebody that's a developer that really wants to do a lot of these, USDA, you can do a $5 million one this week and go back and do a $20 million next week. And then the week after, you can do $15 million. Each one has to be under 25 million, but you can do as many of them as you want. So the larger developers like the USDA products for that reason. You've got the ability to do them. And the other benefit is you have a 30-year term. So it's like a mortgage almost, just like a house mortgage goes 30 years to repay, where the SBA does 25 years. and the interest rate is normally a little less on USDA. So, it's like everything else in life. It's a little bit harder up front, but then its benefits are better in the long run, but it does take longer.
So in my 22 years in the camping business, I could probably count on one hand how many new construction campgrounds I saw, not just in KOA, but in general. I mean, nobody was building campgrounds for a couple of decades. And I assume that's really changed as far as your business goes.
Oh yeah, there's a lot of people doing not only Bizacs, but also building new ones. And like I said, a lot of these little, like that Glamping USA show is full of people that just own land that want to figure out what to do. I mean, that's what that show is. I mean, it's a lot of tire kickers, I guess, is probably the best way to put it. And they're trying to figure out how to develop their land.
Yeah, I mean, I think this year at the glamping show, we saw a lot more people that were kind of more ready to build, or like were a little bit more along in the process. I think in years previous, when I had been there, you had a lot more tire kickers or just people that showed up that were just kind of at that low level, like just exploring level. And I think this year at the show, I saw a lot more people that were taking that next step and ready to build, or had a piece of land that they own that they were ready to start moving on. So that was kind of interesting to see. But yeah, the glamping has just exploded, and a lot of these we're talking about really small parks, you're talking like 6 to 10 units. So,
what is the interest rate fluctuations done to the loan volumes? That this year, have they gone down at all?
Oh yeah, it's the like I said, the number of applications we're getting are the same, but there's a lot more hesitancy on the borrower's part to pull the trigger. The way interest rates are calculated, everything works off of prime, first of all. And prime is fluctuates based on the 5 meetings from the Board of Governors, the Federal Board of Governors.
Yeah.
And they've recently raised it to 7 3/4. And I read the Wall Street Journal every day, which is a good way for me to read it at night, puts me to sleep. But it definitely works well. That's for darn sure. Because when I hit the pillow, I'm out. But the idea behind it is they say that they're probably going to raise it a couple more times, 1/4 of a point, until they start to get inflation down and the labor market cools a little bit, is everything I'm reading. So when I'm talking to my clients, they say, listen, you probably got to expect it's going to go up probably at least another 1/2 point, maybe as much as another point. Now, what the SBA and the USDA both mandate, the lender cannot put a risk premium on top of it that exceeds 2.75%. That's the max, and that's fixed. So right now we're at 10.5 max. It can't go above 10.5 at this point. When the Fed changes it from 7 3/4 to 8, or whatever, however they do it the next time, then we're going to be at 10 3/4. So campground. I tell them you're not going to be making payments probably for a year. So by then, based on everything I'm reading, it's going to level off and probably start to come down, because they're going to, trying to stimulate the economy by lowering the rates. With the USDA, with the equipment financing, it's different. A good lender is going to get it right around the same as an SBA loan. They're probably going to be right around 10, and it's going to be fixed. It's not a variable rate. It's just a fixed rate for anywhere from 3 to 7 years. It's kind of like financing a car.
Mm-hmm.
So with that product, it's more of a cash flow type of product. That one, in the way I explain this to people, is when you look at the monthly payment instead of the interest rate, the question you have to answer is, are you going to bring in more rental income than the payment? And if you are, then it's a good idea to do it, because you're basically that Danny DeVito movie, Other People's Money. You're using other people's money to make money. If you don't think you're going to bring in as much money in rental income to make the payment, you'd have to have your head examined to do it. It doesn't make sense. So that's more of a cash flow decision that you have to make.
Okay. All right. Well, we have to take a quick break to recognize our sponsor, and we will be back to talk with Paul once the break is over. Thanks. WCM's Park Update is being brought to you by Woodall's Campground Magazine. For over 5 decades, Woodall's Campground Magazine has aimed to provide park owners and operators with the relevant industry news they need to run their businesses more efficiently. As times have changed, so has Woodall's Campground Magazine. Besides just its print publication, which is distributed to more than 14,000 industry professionals every month, the magazine also reaches readers through its various social media platforms, including Facebook at WoodallCM, LinkedIn, and YouTube. Woodall's Campground Magazine also offers a daily e-blast which highlights the top news from the industry. The best part, everything we do is advertiser supported and free to our readers. As the outdoor hospitality industry continues to grow at a rapid pace, it is important to stay up to date on trends and other relevant news. Subscribe to Woodall's Campground Magazine at woodallscm.com. Hi, welcome back to WCM's Park Update with our guest Paul Bosley from Business Finance Depot, and he has been talking just about some of the different factors impacting the loan process, how long it can take to get loans, just building developments, expansions. It's just been real fascinating. I know Woodall's just recently had a story about kind of the real estate market and some of the economic issues. I guess, are there other economic factors besides maybe interest rates that are impacting, like USDA loans or SBA loans or people applying for loans?
Well, I think probably the biggest thing I'm noticing is because the idea of taking advantage of the campground industry itself, because it's expanded so much due to COVID. The biggest thing I'm seeing is there's just a lot of landowners that are interested in developing their land to turn it into a campground or to a small. I've even seen a lot of little tiny home development people. So it's not even an RV park. It's people that are just trying to put park model cabins or tiny homes on the land and have a little kind of tiny home resort. I've seen my first 2 of those within the last couple months. I think that's the biggest thing I've noticed. Other than that, it's the same old, same old. I mean, underwriting is underwriting.
You mentioned you're going back to this weekend to teach at Ogilvy, and what's the clientele look like? What's the student body look like at Ogilvy now? Is it people from all walks of life? Are they younger? Are we getting a lot younger people getting into the camping business now?
Well, every year that this is my 5th year in a row teaching the school. They're from all over the United States, and it's a wide demographic mix. I mean, it's anything from young couples all the way to older people that are looking to build something and maybe hand it off to their kids. I see that a lot with the older people. They've got kids that they're trying to build a business for. Actually, to some extent, I'm in that same kind of group because my daughter owns a percentage of the business, and eventually it's going to be hers if I don't sell it. So you see that a lot, with people. So I haven't noticed any one, demographic or, regional area at all. It's been all over the United States, all age groups.
Yeah, I mean, I guess, do you notice a difference between what maybe the younger and like older people bring when they come for a loan? Are they looking for different things? Are they talking about different things? Do they have like different approaches?
I think a lot of the customers that I'm dealing with that are younger, they either have to get the seller to do a take back note, a holdback note for part of the equity injection, or they have to get a gift letter from a relative or a parent, or they have to bring in an investor. So I think it's there for the equity injection, because as a general rule, when you're doing financing, the minimum equity injection for any type of loan, I don't care whether it's SBA, USDA, is 10%. And the maximum is 30%. I mean, they rarely look for more than 30%. So if you're, let's just say the average campground is $1 million. So, and let's just say the average equity injection is 20%. Well, there's not a lot of people that have a couple $100,000 laying around. So they either have to liquidate stock, do the ROBS program, which is the program by the IRS, which was designed so you can self-fund your project by using your retirement account without putting that money, without paying interest or a penalty on it for early withdrawal or putting it into income, or they have to get a gift, or they have to bring in a partner. I've got in a couple situations right now today, actually, I was talking to one of my lenders about a couple they're really requiring almost the lender or the seller to do a take back note, which basically means that, let's just say in that example, the project is $1.5 million for sale. And let's just say it's a 20% equity injection. So, it's a $300,000 equity injection, and the loan amount's going to be $1.2 million. And it's probably going to be an SBA loan. Well, they've got about half of that money, and they need the seller to do a take back note. The back note means that one is the seller is agreeing to hold a note, a separate note for $150,000 in that example. So they're going to come up with $150 in cash. The seller is going to do a take back note, so for $150. So the total is the $300,000. That's the equity injection. And then the loan amount's $1.2 million. The terms of a seller note are you can accrue interest. It's got to be reasonable interest, probably single digit interest rate for 2 years. You don't get paid for 2 years. And then starting in month 25, you can have a note that you're getting repaid for whatever term you negotiate. So it could be a 5-year term at like 8% or something like that. So that counts as equity injection. We're seeing a lot of that, where we need the seller to do an equity injection, and there's some benefit. A, they help make the sale happen. B, they're not paying taxes, the capital gains on that money, because it's being held back. So they're lowering their taxable income. I mean, there's some benefits to it. And then they have a stream of income later on. So we see that a lot.
So let me ask one of our favorite questions. We seem like we ask it in different ways every week. But are you seeing a lot of development in electronic vehicle charging? Are people investing in that? Are they taking out loans to put in charging stations?
I haven't seen that at all. And I'm not sure we could even finance that. I have, with equipment financing, the equipment's got to be able to be removed. And I kind of doubt you could even remove that, because generally speaking, what you can finance for equipment are things like golf carts or, maybe cell towers or something like that, tiny homes.
But you haven't seen that in new construction at all as part of the loan?
No, I've seen it in new construction, but I haven't seen it in a separate request.
Okay. Yeah, I mean, that's kind of interesting. We've seen some parks looking to invest in that, but it hasn't really, not a tremendous amount of park owners are investing too much in it yet, I guess. Maybe that's something that you'll see down the road as people start inquiring more.
Yeah, it could be. I mean, I don't know. I tried to stop predicting the future quite a while ago.
Well, that was my next question, Paul. I was just going to ask you, where do you think we're going in the next 5 years with loans? I know you mentioned that you think it's going to lighten up in a year, and the interest rates might be coming down.
At least in our situation, I can't answer this other than from my own company, our own personal situation. We're now, I think, in our 6th or 7th year in the industry. So this year we're going to have a pretty strong presence in the glamping show as well as ARVC. So I would expect our business is going to grow quite a bit. Is the way I think our business personally will grow. What I have noticed, and this is an indication of growth anyhow, is there are more lenders exhibiting at these shows. I think at the glamping show, there were 4 lenders. At ARVC, there were 4 lenders. And they wouldn't be, I mean, banks wouldn't be exhibiting unless there was a lot of business to be had, or at least they thought there is. So, I think overall, my general feeling is that this industry is just going to continue to grow for the foreseeable future. And I think that's just because people aren't going to stop taking vacations. And, and a lot of people would rather probably just go out to the country somewhere, to the, parks or something, and rent a cabin or buy a camp. I mean, the other indicator, I guess, I see this in Woodall's a lot, is the RV sales.
Yeah.
When RV sales are an indication of what people are doing, that's for sure. That's a pretty big commitment.
Yeah, I mean, RV sales have went down quite a bit last year. I think they're predicted to go down even more this year. But I think it's
really?
gonna, yeah, I think it's gonna level out. But yeah, I mean, I think they went down like 20% last year, didn't they? Mike?
Yeah, that is the case. I mean, they really fell off the last half of the year. And
but they were at historical highs. So I mean, at some point you had to kind of level off to some degree, and then there's a ton of people with RVs that are still going to use those RVs to camp. So, and there's a lack of campsites, which is really driving developments. So
the backlog of orders to dealers was so huge, for all
Yeah.
those major manufacturers, that they probably got enough work to keep going for another year, just filling out the backlogs, if those backlogs are still standing.
Yeah, I think one of the concerning points for the RV industry is just that, I mean, I notice now when you go by the dealers, you're seeing more stock on their lots and it's staying there. So that'll be kind of interesting to see and how that impacts the outdoor hospitality industry. But I mean, if you bought a unit in the last 2 to 3 years, you're definitely going to be using it to camp, and we'll have to
Yeah,
see.
it is a good indicator, as you said, Paul, of the RV sales, but you got to consider that there's, 14, 15 million of those rolling around out there at various degrees. Maybe they're 10 years old and on up. And that's a lot of inventory that people have invested into, your point, that, they've made the investment in the lifestyle. And I always used to laugh when I get a call from the New York Times or Wall Street Journal when the economy, or when gas prices went up, for instance, and they would assume that our business was in trouble. And I always said, no, we're fine. Well, who's out there doing that? Well, people that chose the lifestyle, and people don't give up a lifestyle choice easily. I mean, this isn't something, it's just like buying a boat, making that investment in how you're in your free time. And once that investment is made, they will give up a lot of other things in order to maintain that lifestyle, because that's what they got it for.
That's right. I
Yeah.
mean, I'm one of them. I have an Airstream. I'm one of them.
And I think sometimes people get in the trap too of comparing it to the auto industry. But I mean, I don't think people are going to buy an RV and then 3 years down the road, they might buy another one. I don't think it's quite the same. I mean, I imagine there's a group of people that do that to some degree. Maybe they want the newest, best unit that's out there. But I think a lot of these people who just bought their units are probably looking at 5 to 10 years before they maybe think about getting another unit. So we'll just have to see. And the ERVs are coming, which is kind of interesting. I know Winnebago's been working pretty heavily on those. So we'll have to see what the future looks like. So it's great. I think the gas prices do impact those parks along the highways and stuff, though, that do rely on the travelers. I don't think people travel as much when gas prices are high. But I noticed that the gas prices are going down, at least in my area. So
Paul, do you see the face of ownership changing? Has it already changed? Are we into more groups? Are the mom and pops giving it up because the time is right? They can get a lot of money for it right now, and they're just choosing now to get out. And we're going to see a lot more group ownership out there.
One of the things I've definitely noticed, and I saw this in the fitness industry too, is the mom and pops. This to me was a mom and pop industry when I first got into it. It reminded me a lot when I got in the health club industry. My first club was when I was 28 that I owned, and it was always a mom and pop industry. You went to the conventions and it was people that owned 1 or 2 in an area, and that was it. And then the big companies started getting involved and the franchises starting to grow. And I think I've seen the same exact thing in this industry. It's almost like deja vu for me, where you're getting these big companies coming in and they're buying up the parks and, I've definitely seen that a lot, and I don't think it's ever going to replace all the mom and pops because the big guys only want them in the big demographic areas where there's a lot of traffic, and that leaves a lot of the United States out there for the mom and pops. But yes, I have definitely seen that trend for sure.
Yeah, and I don't know if that trend's going to slow down. Where I think here at Woodall's we see all the time Blue Water, Sun Outdoors. They're actively buying, seeking parks, and it's kind of interesting. So we'll see what the industry turns into. So, but Paul, it's been great chatting with you. We'll let you go. So have a great time at Arvik's School of Management. It should be a fun experience up there. So
thank you. Looking
You're
forward
not
to
dragging, you're not dragging that Airstream north, are you?
No, well, no, not there because it's still too cold. So we're just doing the hotel thing.
okay. All right. Well, thank you so much, Paul, for coming on the show. And thanks
Paul.
everyone for watching.
You're welcome. Have a great day. Thank you, gentlemen.
Bye.
Bye-bye.
Thank you for listening to WCM's Park Update, a production of Woodall's Campground Magazine. Join us for a new show each Tuesday at 3 p.m. Eastern on Facebook, YouTube, and wherever you listen to podcasts. Follow us on Facebook and LinkedIn for daily news and updates, and subscribe to our news feed on our website at woodallscm.com. Show hosts are Ben Quiggle and Mike Gast. Executive producers Rick Kessler and Alex Burkett. Copyright 2022, G&G Media Group.